Hi, it's Matt with EquiPredict Analytics. We're going to be reviewing how our EquiPredict green wave forecasting model works. We're going to be using the weekly chart of Oracle Corporation, and we're going to talk about what we should be looking for in terms of price action bias between the given dates of a particular forecast, the origination and the termination dates. And again, just briefly, if you're enjoying some of the content we're providing, please do subscribe to the channel. You can also head over to our website, EquiPredict.com. We've got a lot of information over there, as many of you know, regarding market forecasting. And within 2 weeks, we're going to be releasing our 2026 stock market forecast. You can read about and take a look at how our 2025 forecasting models panned out for the prior year. You can learn about our subscription model as well as our proprietary forecasting models over at EquiPredict.com. So up on the screen here, we've got the weekly chart of Oracle Corporation. And we've overlaid on it the green wave forecasting model. Typically what we do is we like to pin down a greater than 80%, 85% or greater forecasting probability whenever we present one of the green wave forecasting models. The green wave is a tie or is a blend between some of the operative cycles as well as mixing in some of the exogenous data drivers that have gotten priced to where it is today and what we should expect in terms of bias, not magnitude of a price action move ahead within given period, a given calendar period. So for example, in this particular case, this is just choosing one going back to 2021. This is July 1st, 2021 origination point, and then August 25th, 2021 termination point. So about a month and a half, a little over a month and a half, they let us know that at that particular time, price action closed around $81.80 a share. The price action closing by the time the green wave terminated was about $89.43 per share. So a nice profit trade there. Again, here's another one. This one origination point was March 4th, 2021. This green wave terminated May 5th, 2021. And price action went from about $70 per share up to, around $80 per share. So a $10 price increase given in that particular time frame. Now, again, this is an 80%, about a 78-80% probability attached to this particular green wave. I just want to locate a particular period of time to where the green wave did not work out. Let's see if we can find one here. So we can understand what to look for in terms of the forecast not working out as planned. So this one looks fairly decent. So the price action, the forecast, and the green wave forecast started around April 11th, 2019. Price action closed around $54.50 per share. The termination of this particular green wave was June 5th, 2019, and price action closed around $53.26 per share. The price action will not follow necessarily, the magnitude of the price will not follow the green wave forecasting model in terms of how it behaves on the price chart, but rather the bias that we should expect. We should be looking for bullish bias, bearish bias. The green wave model does focus primarily on bullish bias periods of time. What I mean by that is that when we give you a calendar date, oftentimes what we do is we just mark here when we present any one of our models, the red, the blue, the green wave, we mark the date of when the origination point for the green wave forecast is, and we also typically mark when we should be looking for the forecast to terminate as well. So we try to give you precise dates for our subscribers on how this works. And then we should be looking for price action to be bullish between those particular dates. So we're just going to fast forward in time here, and I'm going to show you kind of what the current model says going into 2026. Our subscribers do have a current forecast for Oracle, which blends a couple of our different forecasting models going into 2026, but they have a little bit longer term going into the spring. So we're just going to share with you what we should be looking for going into right here, right now. So we did have a green wave model that did begin, a green wave forecasting model that did originate on December 11th, 2025. At that particular time, price was closing around $189.92 for Oracle Corporation. And so this particular green wave model does terminate on February 4th, 2026. So you do have about a month and a half or so given ahead of us, where we should be looking for price to rise above $189, above $190 per share, and terminate higher than that going into 2026. Now, again, I have to emphasize that it doesn't show you the price magnitude of the move. It could be just $191 per share where it closes, or higher going into February of 2026. So I hope that helps you in terms of your using our Green Wave model if you're a subscriber, or if you're interested in becoming a subscriber, what to look for when we do present a Green Wave model on any one of our equities. So again, good trading, and do be careful out there. Take care.